Over to you, Philip.
All right, thank you. A very good morning, ladies and gentlemen, and welcome to NCBA Property Finance webinar themed Unpacking the Journey to Property Ownership. It is indeed a great pleasure to be hosting our very first property finance webinar today, and on behalf of the NCBA Group Managing Director, Mr. John Gashora, and the entire NCBA leadership, I would like to appreciate you taking the time to log into this webinar this morning. My name is Philip Omondi, and I'm the Business Development Manager Property Finance at NCBA Bank, and I will be your MC for today. We've lined up a panel of industry leaders for our first ever property finance webinar who will unpack our theme for today, demystify the journey to property ownership, and share property ownership insight as well as lender perspective on the property market outlook as it is today. I'm therefore delighted to extend a warm welcome to our speakers and our panelists today who will engage us in this discussion. Our panelists today are, I'll just request our panelists just to say hi. I'll start off in no particular order. Mr. Gikonyo Gitonga, who is the MD for Axis Real Estate. Mr. Gikonyo.
Yes, good morning to you all, members of the viewers.
Thank you, Mr. Gikonyo. Mr. Wilson Mugambi, who is the Vice President, Architectural Association of Kenya. Mr. Mugambi.
Thank you for having me.
Thank you. And of course, the only lady in the room, Stella Mutai, who is our Head of Property Finance at NCBA Bank.
Good morning.
Thank you, Stella. A kind reminder, please feel free to send in your question, comments using the chat button for those who have logged in on Zoom and on Facebook under the comment section, and we'll be glad to take them at a later part of this webinar. Allow me just to make a few remarks to set the context for this discussion. Investing in property has always been positioned as the ideal investment vehicle for long-term growth and returns. And surprisingly, the path to home ownership can be a tricky one. And at any given time, you ask yourselves questions like, how do I start? What do I do? However, with the right kind of advice, the journey is usually a rewarding one. Prior to COVID-19 pandemic, Kenya's real estate sector was poised for growth in 2020, having begun to show swings of recovery in 2019 from a sluggish growth experience in 2017 and 2018. With the onset of COVID-19 pandemic, unprecedented disruption to the Kenyan economy has been witnessed over the past few months, with the real estate sector experiencing shock attributed to lockdown measures. While the sector is indeed facing hard times, it might be a good timing and a good thing in disguise for some of interested property buyers and property owners. As demand increases further and further due to the pandemic, developers are willing to negotiate further than the pre-COVID level as they were more eager to maintain a healthy cash flow to weather the COVID-19 storm. As a result, some real estate developers are currently offering discounts on some selected units on their projects. Such discount wouldn't have been considered during pre-COVID times. However, this is not expected in the long term, as many experts predict the market to pick up as soon as normalcy returns. At NCBA, we continue to support our customers, keep them informed, and help them to make the right financial decisions concerning the property market. Without much further ado, it now gives me great pleasure to invite our Group Director, Retail Banking, Mr. Tyrus Muthaiga, to give us the opening remarks. Welcome, Mr. Tyrus.
Thank you, Philip, and good morning. It's a pleasure to join the discussion today, and I'll start by thanking all of the attendees that have set aside time this morning to join us today, but also a special welcome to our panelists. I'm looking forward to a robust and interesting conversation and an opportunity to learn as well. I think, as you've said, and picking up on your last point about that investing in property is tricky. In fact, I read the French writer Voltaire, who said, if you see a Swiss banker jump out of the window, jump out after him. There's surely something to be gained. He must be knowing something. But it's not that simple with property. The fact that your neighbor or your colleague is either building or buying somewhere doesn't necessarily mean that solution, necessarily works for you. Which is why today's topic, Unpacking the Journey to Property Ownership, seeks to help add to the conversation and position NCBA as a key partner in helping you navigate this situation. The topic is timely because, as Philip said, we are seeing a significant growth in the middle income class. The number of people that are now able to look at home ownership, and real estate financing has actually become one of the fastest growing sectors in banks' balance sheets, particularly from the private sector perspective. Residential mortgage financing has been driving a lot of this growth when banks opened up the availability of finance to individuals to be able to buy homes. It has helped fuel this, particularly in the key towns, initially in Nairobi, but it's now rapidly spreading to Nakuru, Eldoret, Kisumu, Mombasa, and many of the other counties as well. We therefore expect an increase in the uptake of mortgage products. We expect an uptick in the requests for support on the real estate construction finance perspective, because one of the conundrums I think that we all face in Kenya is that they still have significant housing shortfall. Estimates will speak, and I'm sure the experts on the panel today will speak and shed more light on this, that the housing shortfall runs into tens and hundreds of thousands of units per year. The infrastructure development that the Kenya government has been driving over the last, particularly the last 7 to probably 10 years, is also opening up new suburbs, new neighborhoods, whereby access to areas that hitherto are difficult to get to is opening up, and that's creating the opportunity in the market. Over the past, as I've noted, the demand has increased from both a construction perspective and also from a mortgage. And I'm looking forward to having the conversation as to how NCBA can continue to support that. Also very exciting is the State Department of Housing initiative around affordable housing. When we heard about it initially, I think those questions, is this viable? Is the scale of the ambition actually achievable? The first project is about to launch at Park Road in Pangani, and plans that we are starting to see from the State Department of Housing indicate that there's additional units that are going to come out. It will be a challenge for bankers to make sure that we keep mortgages affordable, and it is something that my team and I, both at the executive and product management level, are looking at very, very keenly to make sure that we will support this very important Big Four agenda with the government of Kenya to ensure that when those homes and houses become available, we actually can offer them at an affordable rate. And I believe the opportunity is significant. As I said, the challenge of home ownership has been constrained by not only the lack of affordable housing, because obviously construction costs have been high. And when you look at the technologies, when I visit these projects that have been deployed, they are helping lower the cost of construction, which also enables us lower the cost of the selling price of those units. And so our part, and we are very keen and committed to support this, is to ensure that the mortgage provision will also be affordable as well. On construction finance, as Philip mentioned in his opening remarks, COVID has exposed the sector to some challenges. Some elements of if you tier the provision of the homes, Some have been more challenged than others. And as I've said before, we always assumed, real estate income was, we used to call it a passive income, But when people started losing jobs or experiencing salary cuts, we realized that maybe it wasn't as passive. And yes, it cannot be taken for guaranteed. So we are also, remaining in the market to help our customers finance the construction of houses. We have also been quite cautious and have reviewed our processes and the way we support these clients to make sure that the project management, the project finance phases are being executed in a careful way. Part of these initiatives has been the creation of a panel of in-house experts in Stella's team that work very closely with our clients, architects, and quantity surveyors to make sure that the project plans that are put together actually are robust. And we are also satisfied and we point out any issues or weaknesses in the project structure that might be a risk that might manifest either in the project execution or in the offloading of those units once they become ready. It is an opportunity that I think I would invite a lot of our clients or people on the call today to approach us and let's have a conversation. If you've got an idea on a project, starting to partner with your financial services provider from the word go. Before you buy the plot, before you've built a house, we have the expertise in-house from a group of professionals. And by professionals, I mean quantity surveyors and project, construction project managers that have the experience over many years in supporting these projects and learning about where the pitfalls might be. We also have a property unit located at our Mama Ngina branch, Mama Ngina Street branch, that is a one-stop shop for your property needs, whether you're buying or looking to construct. You'll meet Philip Omondi if you go there and his colleagues. And the idea here is a one-stop shop that also helps, as I said, an individual looking to buy or to construct, or even if you're just exploring what is available in the market. We provide space for people who have units to offload to display, the 3D models or something on the panel. There are screens where you can leave your brochure digitally or in paper. And the idea of this is that in walking there, we can help you on the journey, as we said, to help you own your home. We also understand that the importance of efficiency in providing this professional service is absolutely key. And we track very closely our processes to make sure that we turn around decisions quickly. Very often when these transactions start to happen, a unit is available in the market and it may go quickly. So one of the commitments that we made is following on the understanding of your unique requirements, and we structure a product whether to help you finance a construction or to buy a unit, is to also be quick in the process. And that is a commitment that I'm very keen on and that we track very closely. Today, we've brought a panel of industry experts, as you've had through the introductions, to actually to shed more light in terms of what has been happening in the sector, and more interestingly, what the outlook looks like. It's been a very uncertain year. We know that COVID is unprecedented in most of our adults' life in terms of the impact that it has had both economically, socially, and even the way we work. And so I'll be keen to hear and follow the conversation very, very keenly and invite your questions as well around what is the outlook for the sector? Do we think it will recover? How soon will it recover? And I know I'm putting my experts on the spot here, but it is an uncertain question that has caused a lot of people to ask, is this the right time for me to buy a house? Or I bought a house recently, should I be looking to sell or should I be looking to hold? So as I conclude, I look forward to an interactive session. I do invite your questions on the chat box on Facebook. Do post your comments. We'll pick up as many of them as we can in the course of today's morning discussion. But ultimately, I do hope that you will learn, you will find this an insightful and probably give you more confidence for the projects that you're considering. And more importantly for us, to see that NCBA, beyond the product provision, our unique products, and Stella will be talking about these in the panel discussion later, is really positioning ourselves as a partner to help you in the journey to making probably the biggest and most important financial decision a lot of people make, which is owning a home. I look forward to a lively conversation and discussion, and we'll hand back to Philip to take over from there. Good morning, everybody, and thank you for joining us.
All right. Thank you, Tyrus, for those great insights and for amplifying the context of what we intend to discuss this morning, and for reaffirming indeed that NCBA aspires to be your financial partner that inspires growth. Allow me just to jump back to the introductory part where I think I may have missed to introduce one of our panelists, and apologies for that, Mr. John Mururi, who is a lawyer and partner at Mururi and Washira Advocates. Warm welcome, Mr. Mururi. Please say hi to our listeners and our viewers this morning.
Thank you so much, Philip, and a very good morning to our listeners and viewers. I look forward to an interactive discussion with everybody. Thank you.
Thank you, Mr. Mururi. On to our next segment of this webinar. And now, ladies and gentlemen, I would like to introduce our keynote speaker for today, Mr. Gikonyo Gitonga, who is the Managing Director of Axis Real Estate. Mr. Gitonga has over 30 years experience as a real estate professional in Kenya. For over 20 years of this, he has been involved in senior management of a professional services company. He's also the chair of Land Physical Planning, Housing and Urban Development Sector Board at the Kenya Private Sector Alliance, KEPSA, and the director at the Property Developers Association, KPDA, and the chair of the Public Advocacy Committee. He's also a member of the Task Force on Construction Industry Policy. Mr. Gitonga holds a Bachelor of Arts in Land and Economics from the University of Nairobi and a Master of Science majoring in Economics in Urban Development Planning from the University of London. He's a full member of the Institution of Surveyors of Kenya, covering valuation and estate chapter. And he is also a registered estate agent. With that brief introduction, I would like to invite Mr. Gikonyo to share his remarks, and in so doing, highlight the property ownership options, as well as emerging trends in the residential property ownership in Kenya. To also just shed light on some of the common pitfalls of what we call scams in property ownership and how to avoid them, and highlighting the importance of due diligence whilst doing so. Take it away, Mr. Gikonyo.
Thank you very much, Philip. And I would like to, first of all, thank NCBA Bank for inviting me to speak. I don't take that honor lightly, considering that this is your first property webinar, and it just strengthens our relationship as Axis Real Estate, the company of which I'm a founder and managing director, is also a partner with NCBA, and we're on their panel of valuers. I think when we look at property ownership options, the first thing that what happens is that you have the first step. You start with the $1 million question, or the million shilling question on whether to rent or own a home. So what happens is that you make that decision that maybe it doesn't make sense to continue renting a home, that you want to buy your own home. Today, I'm not going to enter into the debate of the pros and cons of whether to rent or own. I think we are focusing on we want to own a home. So at some point of time in your lives, we all want to be homeowners. And the question is why? People will have different reasons of why they want to own a home. For their own security and stability, they want to say, I'm a homeowner, I own a home. You want to own it because it's a tried and tested and it's a tangible investment that you can see that will eventually appreciate. There's always the notion that you'll never go wrong with owning a property. It will always appreciate. However, sometimes it does depreciate. So not that it always appreciates. Another reason is maybe you are getting pressure from your spouse, your immediate family, your parents. And if you think about it, some people when you've left university and you've been working for a few years, your parents will always ask you, have you bought a house? Have you bought a house? Have you bought a plot? And those are the things that you will sometimes face. You'll also face peer pressure from your friends, from your colleagues, from even the people you work with. And then also, you also will invest in that property because you believe it is an equity, and then you'll get a return on equity. I know that for Tyrus, who is an investment banker, he knows the term of return on equity. Although I've also coined another term, there's one that is called return on ego. So sometimes you will buy a property so that you can get a return on your ego. You feel that you have made it. While you're making all these decisions, I shall constantly remind you, all of you property homeowners and all this, there's one golden rule: consult your spouse before you make that decision. Then after that, it's to decide whatever is your motivation. You then have the decision to own a residential property can be daunting, with two clear ways of acquiring this, I said. Do you build one yourself, or do you buy a ready development, either already completed or off plan? So those are the decisions now you're trying to make those two decisions. Before coming to the final decision, it's important to understand that you've got both options and you want to settle with one that gets the best that suits your means. Do you have the ability to afford to buy it in cash? Or do you want to buy, or do you want to build slowly from your savings? Do you want to build from the cooperative loans that you might get here and there? Or you decide you want to go and get a mortgage. You want to go to the bank and borrow money. So if you're deciding either for buying or building, if you're borrowing, you need to understand your ability to meet the mortgage repayments, and also understanding your needs at the time of investing. Understanding your needs at the time of investment means, what are you doing at that time? Are you spending a lot of money that you need to support your business? So that maybe home ownership might not be a priority. Maybe you're you are educating your children, and you all know that school fees can be quite expensive. So then you now make a decision whether you want to spend your money on building your house or owning the house, or first of all, you want to get the kids educated, and then you can buy it later. Also, when you're making these decisions, you also look at your socio-economic status, your age, whether you're single or married, number of children. All these decisions will be able to have an effect on whether you shall be able to buy or build your home. Now, basically, in ownership terms, in terms of the terms that you need to understand when you're going to buy, is that you're going to come up with across certain terms that are called freehold, leasehold, sublease, section of property, or fractional ownership. Those are different terminologies that are used, legal terminologies that are used in how you shall own the property, whether it shall be a title, whether it will be a sublease, and I won't go into those details. The other panelist, John, will go into that. Then the next thing is to consider, what is the ownership structure that you want to own this house? Whether it's a house that you're going to build or the house that you're going to own. Are you going to own this house in your own name? Or are you going to own it jointly in the names of you and your spouse? And what are the pros and cons of this? So those are the things that you will consider. Sometimes you might decide, do I register a company or what is called a limited liability partnership to own the property? Or do I just own it in the names of you and your spouse or you yourself? You have also got to think about what will happen to the property in the event that you pass away or one of the owners passes away, this doesn't matter whether you have a will or not. What happens in terms of succession if you have a mortgage? What happens in terms of if you mortgage, if you then go through a divorce, what happens to you? What happens when you lose a job and you can't be able to make the repayment? So those are some of the things that you will have to consider. And you will hear various terminologies, even in legal, what is called a matrimonial property. So a matrimonial property can be interpreted different ways, but it will be basically, it is a property that you have acquired with your spouse at the time you're both staying together, or whether you're when you're married, or whether you're just living together, because all of this will have an effect, whether in terms of your ownership. It will also have an effect in terms of even when you're going to borrow. In the olden days, some wazers would go and buy a property. They don't tell their wives. And then later on, when they're coming to divorce, it's then said, this is a matrimonial property. And the guy will try to say, we were not together, she did not contribute. So these are some of the things that you have to consider. Then after that, you then make a decision that you want to buy a property. So what do you want? Do you want to buy a furnished or serviced apartment? Do you want to buy just an apartment where the management is being retained by the developer or being given to a management company? If you do that, what say do you still have? What rights and obligations? What is the management and governance structure of that property that you're living in a block of apartments? Is the management accountable to you? Do they give you reports, produce management accounts, audit accounts? How do they charge, service charge? You also then have to make a decision on whether you want to live in a standalone, an apartment, or in a gated community. What rights do you get? You need to consider, are you a shareholder in a management company that owns the head lease? Issues could arise in that the developer still has a big say and interest in the development, even after the sale of the property. And these are things that you need to look at by the time you make that investment in the property. What will be the future hidden costs, like land rent, and service charge? What will be the rules and regulations in that development? So when we come and look at the common pitfalls, in property ownership and how to avoid them, I want to highlight the importance of doing the due diligence. When you're looking at, one would be the value. You want to see the value of your home should be weighed against the location, its proximity to workplace, the schools, hospitals, good transportation. You're looking at travel distance, the total living space, and the travel distance for your children and for you as you go to work. You want to look at the neighborhood. What's the neighborhood like? What would be the neighborhood be in the future, and how do you look at it? I always have this principle that your neighbors can be your biggest downfall in terms of the value and the enjoyment of your property. Also look at amenities, which include insecurity, access to your property. You look at things like whether they have a gym, sauna, swimming pool, jogging tracks, clubhouse, etc. Those are some of the things that you want to see. And what rights do you have? How do you access them? Are there any hidden costs that they're there? If you're buying a property, you want to look at, even if you're building, you want to look at the quality of finishes, whether you have provisions for various things like the kitchen, the gas cooker, extractor hood, and so on. If you're going to buy a property, again, the golden rule, go with your spouse. You might think you like the house very nicely, and then you go and find that you have made every decision. You've ticked all the boxes except for one, that you didn't consult your spouse. As an agent who have been in the industry for a very long time, I've been selling properties, and when a person comes to your property, and you spend so much time taking him around, and he has not come with his spouse, or him or her spouse, and they will eventually tell you, I have to come back later. Some of them even will tell you they have to come back with their children. So they'll come back with a wife or husband, then later on they'll come back with their children, because it's a big decision. So when you're looking at, you'll also look at what consider, if there's a residents association, what's the management and governance structure? And eventually whether your property will hold value or appreciate in fullness of time. So when you're looking at the second consideration that you're looking at is the cost. Whether you choose to buy or build, this is a very big determinant in the choice that you're making. Whether you're considering building a home, other than the cost of construction, it's important to factor the cost of land purchase, as well as the relevant fees, the cost of including project consultants, quantity surveyors, engineers, architects, contractors, interior designers, the cost of getting county permits, approvals, and licenses, if you plan to get a good finished product. Buying a home just offers all this. It just makes it simple. You don't have to go through and deal with contractors, you don't deal with architects and everything. So some people just say, I don't want to go through all this of building a house. I just want to get a key and open the door and move in. So you'll find that some people, their opinion is that it's just easier to buy a house. Some other people feel they just want to go through the process of, getting a fundi, determine the finishes. And there are some people who will enjoy that journey. However, there are some who have gone through that journey maybe for the first home, and for the second home, they don't wish to go through it again. So you still have to factor in such costs such as mortgage finance, legal fees, stamp duty, insurance, service charge, and even the furnishing of your house. And this all will be discussed later on. Then you come to the question of financing. This is where Stella is going to tell you more and more in details. If you're both buying and constructing a house, it's really important to understand what your financial ability. Do you have a clear plan on how you will finance this project? If you're taking a mortgage to buy the home, do you have a stable and secure income? If you're buying a home, is it a home that needs renovations or maintenance? If it's buying a home, is the accommodation suitable for your family? Many years ago, you would buy a house with, if it's a 3-bedroom house, 3 bedrooms sharing the bathrooms. But nowadays you start finding that a lot of people find that they will insist on every bedroom being en suite. If you're constructing, you're using your savings or taking a loan to finance the construction. Is the land price competitive? Have you got proper advice from an expert that the land price was competitive? You've got to look at cost and timeline of rent as your house is being built. And what kind of tax benefits do you get? How will you factor depreciation over time? And what timelines are you looking for the construction and repayment? Again, involving the entire family in the decision is crucial. We've talked about that. Also, at the same time, ideally, reputed developers will manage their project costs, teams, and timelines and construction progress. So shopping for a house means that you really need to choose something that suits your lifestyle, your income as you plan for your long-term stability. When it comes to legal matters, and that will be put more in detail, more into perspective by John. When you're buying the property or building, what are the rights and obligations that are being transferred to you? what if a seller is selling a development to you? What are the seller's obligations to you? This has been a big question, is that some people have bought properties and there was that seller's obligation that there was going to be a clubhouse or there was going to be a swimming pool. And you then find out later on that you as a buyer are constantly in fights with the developer because he did not deliver on what they promised. I know one development where all the buyers were promised that there will be a clubhouse, but eventually when the development was being completed, the owners or the developers did not actually convert that clubhouse into a clubhouse for the tenants, for the residents, but decided to lease it out commercially. So you find that now the residents are now suing the developer. So you need to look at what are your rights and obligations. If you're buying off plan, is where you even need to be even more careful. What are the rules and regulations for the development? What are the timelines for the delivery of the off plan? And also understanding the processes and for the procedures for the process in when you're buying, if it's a development process. They will come, they will be told there is a booking fee, there's a letter of offer, there's an agreement for sale, and there's a transfer. And John will be able to tell you where at all those stages. One thing that I would like to urge everyone is that when you're going into a development, even if it is an off-plan sale, sometimes you'll be constantly be advised, but the developer will tell you, you know, you can save legal fees by not having a lawyer. We just use our own lawyer, that's the lawyer of the seller, and you'll be okay. I always urge any purchaser of a property or a house, always ensure that you have your own lawyer. Your own lawyer looks after your own interests. Imagine that if the developer has failed to meet his obligations to you, he then could be able, and you have used the same lawyer. So in whose best interest will that lawyer be working for? Finally, last but not least, it's not second last, is that it's important that you do a thorough research. Be familiar, if you're using a developer, be familiar with the developer you're transacting before buying a ready home, even before buying a property, even if it's a service property. Look at their track record in completing projects. You also don't want to deal with a developer who has too many projects, yet none of them have actually been completed. Or one who promises to finish a project this year, but ends up taking 3 more years to complete the project. It's a disappointment you can't avoid if you undertake proper research. Seek professional advice from people, even talk to your friends and hear what happens. If you're building a home, the same research is required when you're looking at the contractors and teams you choose to build your home with. How well do you know these people? What kind of terms and timelines do they promise to versus vis-a-vis the delivery? How does the contractor financial model work? Do they have clear accountability and work plans? Contrast, as I've said, consult people who you can trust and have experience. Plan and think and make decisions that are not influenced by pressure or easy way out. Some people, you go and say that you want to go and do the things, procure the equipment, materials. Some people have gone and you have not got a proper contractor. You've decided to get one of your out of your work relatives. So these are the things you've got to decide. Should you decide to buy a home especially that is off plan, always visit the site to see the progress. It also gives you an opportunity to visualize the final outcome. Some people have bought non-existent projects because they never took time to visit the project site. I one time advised, I was helping a client, but although he had not consulted me before, he went to buy a property that was off plan. And along the way, the developer decided, instead of 4 bedrooms, he decided to make them 3 bedrooms because he thought the bedrooms are not big enough. And that didn't work for the buyer. So he had to get out. So the thing is, if they had a proper sale agreement, at least that he had a way out, because he had been promised a 4-bedroom house, and the developer was now trying to shift goals to say that it's okay, you can just do with 3 bedrooms. So those are things that you need to look at. Coming to develop or build your own house or own or buy a house that has already been developed, there are certain people you need to have. Professional advisors, and this is what Tara's even mentioned. A real estate agent or an advisor is important. It's important to also see, is that a real estate agent? Is he an estate agent who has been registered under the Estate Agents Act? Like me, I am one who's registered. I have been in the business for many years. I have gray beards, so that does, although now today it's a bit black. I just needed to do some makeup for this show. So these are things that you really need to consider. You need somebody who's trusted. Get a good lawyer. Please do not avoid getting a lawyer. He'll act on your behalf in purchasing the land, buying a house, engaging your consultants, and engaging a contractor. Everywhere you go, you will need a lawyer. So don't take the shortcut. Another professional that you will require is the valuer. The valuer will be able to give you market value of the property before you buy it. He will advise you on the land value, the value of the house that you're going to buy. And the value will eventually be used by the bank when they're going to value it for what is called the market value, or what is called the mortgage value or net realizable value, or in some, what they call the forced sale value. The forced sale value. So the valuer, you will also find the registered valuers. And when you're looking at the list that will be provided to you by the bank at NCBA, you will see that Axis Real Estate is at the top because our company starts with the letter A. So that's my little pitch that I had to make. I hope you'll excuse me. If you're building, you need to go further in selecting your professional team. An architect. We have an architect on this panel, on this one of the panelists. Please do not be scared because he's wearing a suit and tie. He is an architect. And my friend Wilson, who's has also is the vice president, you cannot do without an architect, especially if you're going to build. I know some people have decided, let me go to Facebook, let me go to Google, I'll download plans, give the plans to the fundi who built my father's house, and things like that. Please avoid that. An architect will be of very good value to you. He will save you time, he will save you costs, he will help you choose the best materials. And ultimately, he will also guide you on who are the other professionals to use. You need a quantity surveyor who will do the costing for your property. You need a structural engineer who will look at the structure of your house. Very important in terms of looking at loads, and also when you're going to do your roofing structure. The mechanical and electrical engineer who will determine the services you require, will advise on things like CCTV, whether you need solar panels, how much power you're going to use. Also look at having an interior designer. The interior designer will be able to also advise you on how you design the interiors, so that you don't go, that even after you have built your house, you then don't go and try and squeeze 2 beds into 1 bedroom and they can't fit. because at least the interior designer will show you how every furniture will fit and how your house would look like. The landscape architect, especially for the gardens. And in some instances, if you have got a very big project or you want to remove some of the headaches, and employ a good project and construction manager and ensure you have a clerk of works. And then eventually the contractor. Choosing the contractor is very important. And these are the people you will need when you're going to build your house. So I think that I would like to stop there. We will look at more of the questions that will be asked. The journey of building a home or buying a home is one of the most important journeys that a person makes in their life. Like being born, getting married, having a job, building your home, and preparing for your retirement. I cannot tell you how to prepare for your death, but the rest, you are in control of them. So make sure that you make a good decision when you're going, so that you have a painless journey to buy your home or own a home. Thank you very much.
Quite insightful, Mr. Kikonyo. Thank you very much for those many remarks, and for reminding us the importance of home ownership, and also letting us know that there's a terminology today that is called return to ego. Quite interesting. And also for reminding us to always consult your spouse, for those who are married, before you get into any transaction involving property ownership, and also for highlighting the importance of due diligence throughout all this process of owning a property, and also for highlighting the value the professionals add in the process of owning a property. Ladies and gentlemen, it now gives me great pleasure to move on to the next segment, which is, of course, I would like to involve our panelists into just brief discussion to just delve deep into our topic for the day. And to kick us off, allow me to introduce our two next speakers or panelists. I'd like to begin with our architect in the room, Mr. Wilson Mugambi. Mr. Mugambi is an architect with over 18 years experience. He's currently the managing partner at Atco Design Build Limited, a firm specializing in architecture, interior design, and property development. He's previously served as a director in Insignia Designs Limited for 10 years, where he was in charge of design and project management. Additionally, Mr. Mugambi is the Vice President of Architectural Association of Kenya, commonly known as AAK. And he has previously served as a registrar and chairperson of the Architects Chapter within the association. He's also a member of the Board of Registration of Architects and Quantity Surveyors. He served as a director in the Joint Building and Construction Council between 2017 and 2020. He represents AAK in the Standardization and Classification Committee of the Tourism Regulatory Authority and serves as the chairman of that committee that oversees grading of hospitality facilities in Kenya. Mr. Mugambi over here will lend a perspective around building and construction sector. On to our next speaker and panelist for today, Mr. John Miruri. Mr. Miruri is a lawyer and a partner at Miruri and Washira Advocates. John is an advocate of the High Court of Kenya and also the managing partner at the firm. He holds an LLB degree from Catholic University, a diploma in law from Kenya School of Law, and a Master's of Law degree in intellectual property law from the University of Nairobi. He brings on board a wealth of experience spanning over 10 years in property law, conveyancing in general, as well as project financing, commercial and corporate law, intellectual property law, securitization, and immigration law. On the professional front, John is a member of Law Society of Kenya, as well as East African Law Society. Our next panelist is, of course, Stella Mutai, who is the head of property finance at NCBA Bank. Stella brings on board over 10 years experience in property finance, and she's equally a member of women in real estate. Full member equally of Kenya Institute of Management. It now gives me pleasure to invite Mr. Mugambi to share his remarks on our theme topic for today. Mr. Mugambi, take it away.
Thank you very much, Philip, for the invitation to be part of this very distinguished panel and this very important topic of property finance and ownership in Kenya. Actually, the areas I was to touch on, Bwana Gikonyo has actually touched on them, but I think mine will just be to lend some more weight into it when we look at what someone needs in terms of the journey to property ownership. Most people will find themselves in a situation whereby, for instance, they have, say, a plot or a kapuloti, as they call it here, or they're actually looking for a parcel. So when you're looking to build your home, there are three things that I normally ask my clients. One, what kind of location are you looking at? Because it's either something in the suburbs, sometimes in the village. The people want to settle in Thika and deep down in Moranga and come work in Nairobi. There are people who want to work right in the middle of the city, and they actually find that such people have a property, say, in Kileleshwa or Kilimani, and they're actually looking to develop their home there. Although that has, of course, been overtaken by events with the surge of apartments that we have. But one of the key things that I come in to advise is always involve very distinguished professionals, but also people who have been registered by the respective boards. Gikonyo touched on, of course, having an architect. The architect is the lead consultant. He or she is the person who will be in charge of the whole project team. And even legally, they are recognized as the lead consultant of the entire project team. So whenever they're forming a consortium to come up with people to consult on your project, the architect will be the one in charge. Also, you look at having someone like a structural engineer. Structural engineer will, of course, be in charge of looking at the structural elements. You'll be looking at your foundation work, your walling works, your roof, even things like the drainage and the driveways that you have. Some people may not even realize, even a boundary wall, you need an engineer to design the boundary wall structure. Another consultant who is very important is the quantity surveyor, who I believe Stella and the team at NCBA will strongly advise you need to have, and they cannot even approve your project without a quantity surveyor. A quantity surveyor is a professional who actually tabulates the cost of your project and comes up with estimates which guide to basically serve as a check for you to look at how your project is progressing. So you'll find that he'll give you an estimate. So your project is worth 10 million, and you'll be able to see the milestones. So that foundation will cost this much, up to the roof will cost this much, and the finishes will cost a certain amount. So without a QS, then I don't think you'll be doing anything in a project apart from having something beautiful on paper. The other consultant you need is a services engineer. And this actually, they come in a duo. A services engineer, you'll find there's an element of mechanical and electrical. And both of these have different scopes. The mechanical engineer will look at things like the plumbing fixtures, all your waterworks, and ideally anything to do with water. That's where the mechanical engineer comes in. The electrical engineer will look at the elements of wiring. And they also go a step further and look at, apart from your wiring and having your electricity in place and all your sockets and switches, they also look into security. You find electrical engineers also take it a notch higher, and they give you the option of integrating security, be it cameras, be it vibration sensors. And these are the kind of things that most homeowners will not be aware about unless they are engaging professionals. The other one who you need to engage with, and most people actually overlook it, is a landscape architect. You'll find that, let me just give an example from the panel. Philip is building his house. He's come up with, his architect has given him a very good plan, and they've built. When it comes to the end of the project, it's been handed over. He says, I have a gardener from a friend of mine of the village somewhere who can help me plant some grass. Trust me, it's not just that. You don't just plant grass. There's actually a method, a methodology, and actually very critical thinking towards how your landscaping will look, down to the type of flowers you have, down to the type of trees you have. They create a certain ambience. You may even find that maybe you're allergic to some certain plants, and some landscape architects will actually advise you. These normally have more pollen than others, so it's very important to have a landscape architect. Never overlook that. And last but not least, of course, is a contractor. And of course, we have the phenomenon which Gikonyo has mentioned. Whatever you do not just say you're going to give your project to a fundi to build for you. You also need to vet these people, and that's where we as professionals come in to try and guide you and give you the sort of advice and make sure that your project is not just one of those projects that ends up being a laughing stock or a stalled project. And a contractor is the person who ties in everything, because he or she will take the drawings from the architect, the quantities from the QS, and the drawings from the other consultants, and now make your dream a reality. And contractors come in various grades. If you look at the regulatory body contractors, that is the National Construction Authority, contractors come from grade NCBA grade 8 up to 1. And 1 are the type who do the very large infrastructure projects, you know, the huge roads, the people who do projects worth billions. NCBA 8 can only do projects just not more than 10 million. So it's also good to gauge. Once you have a big queue which says your project is even going to 11 million, you definitely need to step up and think of NCBA 7. So those grades are actually available online. You can actually look at them. And we as professionals are there to guide you on what kind of contractor to engage for your project. And it also helps not just to look at the papers, but also look at someone's portfolio for all the consultants and the contractor. Because yes, I come in as an architect, but you also need to see what I have done. You need to see what kind of projects I have come up with and the kind of completion they have, and even whether it aligns with your dreams as a developer or a client. Because what works for client A and B will not work for you. So you may find that maybe this architect does not understand your brief, and then you may need to consult 2, 3. I mean, I've been subjected to an interview session whereby someone tells you, I'm looking for an architect, and shortlisted 3 of you, and I want to see whether you'll be able to fit the bill. And the same applies for the other consultants. It's always good to look for people with good requisite experience to give you the kind of service that you need. When it comes to the importance of these professionals, the value of them comes not only in the experience, but also the integrity and even the kind of qualifications they have. For architects and quality surveyors, you need to engage architects and quality surveyors who are registered with the Board of Registration of Architects and Quality Surveyors. Because in case of any dispute or issue within the scope of the project, you'll need some sort of fallback plan. And it's always good to have people who have a regulatory body with them, such that you're able to go to the body and say, okay, Wilson has done this and this, I'm not happy about it, and you can seek to sort it. But if you just go and look, as Gikonya mentioned, you just get some drawing somewhere and find someone to just put together some drawings for you and submit it within some sort of backdoor means, then you end up being stuck and you're not able to go and handle any dispute. Same case for engineers, the structural and services engineers. You need to have someone who's actually registered with EBK, Engineers Registration Board, Engineers Board of Kenya. And this is someone, of course, who's been vetted and has actually gone through the necessary examination procedure to be granted that title of engineer. Landscape architects are actually regulated by the Architectural Association of Kenya, and they actually do an exam, which now gives them the corporate status to be able to practice. For contractors, you have the National Construction Authority, so you have to make sure that all your consultants and the contractors are up to date. And we all have practicing certificates. So, for instance, if you engage in an architect, QS, or engineer, you need to make sure that they're in good standing for the year 2020, for instance. If you find that someone is not able to give you the practicing certificate, that is a red flag that you definitely need to look at and maybe consult more. And as has been mentioned, talk to your friends, talk to your family. I'm sure most of us, like for instance, we are not meant to advertise as architects. And how do we get our jobs? Referral. So it needs for Wilson to do a good job for Stella to recommend me to Philip. And that's how it works. That's how you're able to get reputable consultants for your projects. And as you're doing a project, I think it's very important, as has been mentioned, no man is an island. So I normally never take any sort of brief unless I know if it's a couple, let both of them be on board. Because one thing I've noticed, the ladies have power. They're the ones who decide. I want a house which looks like this, the finishes will be like this. And for the gentlemen, sorry, most of the time you're most likely just going to be bankrolling, and you'll be a ceremonial figure. The ladies are the ones who know it's their home. So I always advise people, let your wife be there as we are conceptualizing the project, because you do not want a scenario whereby you start demolishing because we need to change the kitchen, we need to change the master bedroom, we need to change the guest bedrooms. So always take a project with a wholesome approach. Let us remove the selfishness of I'm doing like a project on the side. Let us also have a lot of consultancy, because at the end of it, people in your family needs to be aware of what kind of investments you're undertaking. When it comes to issues like approval, which is now the next stage, once you've designed your project, your consultants are giving you all the drawings, you need to now submit the drawings for approval. And there are several levels of approval. Depending on the county you're in, you definitely have to get development approval, say Nairobi County, Kiambu County, whichever. And most of these counties, they have a list of architects who are allowed to submit, and that's where now your architect comes in. He or she comes in and submits a project, and within, normally the standard turnaround time for getting your project approved is about 1 to 2 months for a residential project. Some counties guarantee you 14 days, but I normally advise, let's work with 1 month, because you never know, there's always the nitty-gritty of the procedure of the counties. Once you've gotten your architectural drawings approved, your structural drawings also need to be approved, and the structural engineer will need to push that. And trust you me, none of these counties will take drawings unless they have been submitted by a registered architect and structural engineer. So it's very important, as I've mentioned, to make sure that your consultants are certified to practice. The other approval that you need now is the NEMA approval, which is National Environmental Management Authority. That one now basically means that your project has no environmental impact, and you normally consult an EIA expert to give a quick report and submit it to NEMA, such that now they're able to give you your go-ahead. For most residential projects, it's normally not a headache, because for a single dwelling house, you rarely find that it has a very huge impact on the surroundings. But whereby people are doing multi-story apartments or even a commercial buildings or a hotel, then you definitely have a very comprehensive report indicating the kind of impact that your development has. And the kind of impact that's normally looked into is issues of drainage, waste management, and also things like noise and overall pollution in case there's any sort of industrial activity happening there. Last but not least, you also need the National Construction Authority approval. And this is now the last one which happens. Once you've gotten your county approval and your NEMA approval, you get an NCBA approval, and NCBA actually now look at your drawings and say these are approved, well and good. NEMA have given a go-ahead, well and good. And you've also chosen a proper contractor for the project. They'll also not allow you to just have any contractor. The contractor has to be within their list, up to date, and also able to practice and, or not able to practice, able to take on your project and do it within the timeline and budget that you have. So ideally, that's what you look at. And when you go further into it, once your project has been constructed, it's always good to have regular interaction with your consultants. I normally advise my clients, if you're going to have a project and you're on site, let us have meetings every fortnight or at least once a month, because on average, a residential house will take about 9 months to build. And within those 9 months, if you're able to have at least 2 meetings a month, you're talking about 18 meetings. That should be enough hands-on sort of expertise for you to make sure that at every stage, whatever is happening in the project, you're up to date as a client, your consultants are also aware of what's happening, and also the contractor is being kept on toes. Because if you leave it to the contractor, most of the time he or she will just proceed and finish, because they're also looking at making sure they make their money quickly. But if you have a lot of interaction and you have constant inspection, then there's no guesswork. All clarifications are done on site. And I always advise, let us all be active on site as clients. Don't just say that I'm leaving it to my architect to give me the keys to my house. No, you need to be involved. Residential houses are very personal. Those are kind of projects which you cannot compare that to an office block where you're just putting up offices and you have spaces which will be taken over by the tenants. When it comes to a residential house, even the entrance matters. Even something as simple as what kind of doorknobs or what kind of windows you have, that matters. So it's always good to have a very active presence as a developer or a client on your site, because at the end of it, you're the one who's going to live with it. All the consultants and the contractor will leave you there. The last thing you need is to be left with a headache or an eyesore. So let us all be active in the projects that we're doing. At the end of this project, what do you get? The respective county will give you a certificate of occupancy. And most people overlook this because they feel that once I've gotten the keys, there's the euphoria of I have a house, I can move on in my life. But you need to have this document because it certifies that that project has been completed to the standards of the Kenya Building Code, and the county has given you the right to occupy it. You also find that that certificate legitimizes the project, because most people move into their homes without that document. But along the way, they realize, oh my, I need this. And what makes them realize that they need a certificate of occupancy? It's either the body which finances them, like the bank, or even when it comes to the time of, say, borrowing against the property, they realize, oh, I have the approved drawings, I have everything, but I do not have that certificate of occupancy. It is very important. Another thing that's important with that certificate is that if you're looking to dispose of the property, the certificate of occupancy is one of the things that you actually need to give to the buyer that you're selling to, and because he or she will need all the documents to also justify the purchase to their financier, and also for their own records and peace of mind. It's very key that you make sure you have all that in place. So yeah, in a nutshell, Philip, that is what we look at in terms of the process of construction and building your own home. And yeah, I'll be looking forward to a discussion and questions.
Right. Thank you very much, Mr. Mugambi, for those insightful remarks, clearly outlining the journey and the consultants required, giving their roles from architects, structural engineers, quantity surveyors, service engineers, and in extension, contractors, and equally highlighting the value of having qualified consultants and contractors in a construction project. At this point, I would like to introduce or welcome Mr. John Mururi, who is a lawyer in the room, to perhaps just share a brief outline of the property ownership journey from property identification, carrying out research. When are you required to execute a sale agreement? When is valuation involved by the government? When is the transfer and charge happen in case you're taking facility from a bank like NCBA? And then what is the role of a lawyer in the property ownership journey? Take it away, Mr. Mururi.
All right. Many thanks, Philip, for the introduction and for having me on board as well. NCBA, of course, is an industry giant in terms of property financing and acquisition. It's always a pleasure partnering with them in this journey. I've also say thank you to my fellow panelists. Say I must have learned a lot from Mr. Mugambi and Mr. Getonga. And I hope our viewers and listeners have also gotten to learn a thing or two. As Philip said, my name is Mururi John, and I'm an advocate of the High Court, practicing with the firm of Mururi Machine Advocates. We are one of the lawyers in the panel of NCBA, and therefore happy to be partnering with them today. Now, as you're all aware, the property acquisition is a purely legal affair, and therefore lawyers play a very critical role in the process of property acquisition. There are a number of things that lawyers do, and I've tried to summarize them, as you'll see in the slides, into three broad roles. Is what you call pre-contract inquiries or pre-contract questions. Is what we call negotiation of contract and contract inquiries. And then finally, we have the end product of the property acquisition process, which is the registration of conveyancing instruments and perfection of securities, where the purchaser or the buyer is being then financed by the bank. So jumping right into it, pre-contract inquiries, as the word suggests, refers to the concerns or the questions that your lawyer is asking you, or is trying to gather information regarding the nature of property that you want to buy and the nature of the transaction. Because remember, your lawyer will at some point have to enter into a contract, will have to sign a sale agreement. And before you get to that level, the lawyer needs to have a very clear idea, very clear picture of the nature of property you wish to buy, the nature of transaction that you're getting into, which will then inform the contents of the sale agreement or the contract that your advocate or your lawyer will be preparing. So pre-contract inquiries will range from a number of things. It could be just general questions that your lawyer will ask you when you first visit his office and give you the instructions that you want to buy property. So he might ask you a few questions just to get an idea of the nature of property you want to buy, what you want to use the property for, what you're trying to achieve, so that just to ensure that your interests match with the requirements of the law. It might also involve examination of documents. Your lawyer might ask for a number of documents just to look at them, to see whether there are any issues that need to be addressed. It might also involve site visitation. Your lawyer might want to visit the property, to, for example, find out, is it the property very close to a water reservoir, and such as to amount to the property being within a riparian reserve, which is prohibited under the law, and the likes, okay? So in terms of observation of documents, for example, what the lawyer is looking at is the title, the document of title that you want to buy from the seller. So the lawyer will be engaging the seller or the seller's lawyer, if the seller has a lawyer, just to share with them a copy of the title documents that they're holding, to look at them and see whether there are any manifest red flags. See, for example, a title document is supposed to be signed by a land registrar, and that registrar is supposed to put their name, all right? So should you get a copy of a title and you realize that the title is not signed by the registrar or does not bear a government seal, then that is a potential red flag. You want to find out more information. Why is it that this title lacks a signature or the name of a registrar? We also have these days, we have titles that also have watermarks. So if you get a title and you realize that it doesn't have a watermark, you want to find out more, where did this title come from? Is it really genuine? Those are some of the questions that you're trying to ask yourself. Now, property is also owned through other means apart from title documents. You also have letter of allotments for properties that you buy from the former city councils and municipal councils, now county governments. You could also have share certificates that are issued by some land selling companies. So even those, you want to investigate, you want to look at them and find out whether there are any issues that need to be addressed, just an observation of the document. We also have deed plans and mutation forms, where the property that you wish to buy is a new subdivision. Because in the subdivision process, I'm not sure whether we have a surveyor in the panel, but in the subdivision process, the end product is that you're then going to get a deed plan, or you're going to get a mutation form that is then registered. So you want to also look at that and see whether there are any steps that were missed, or there is anything that raises an eyebrow, so that it is then addressed. Still under pre-contract inquiries, as has been mentioned by previous speakers, I think Mr. Gitonga spoke about it. Lawyers play a very critical role in the conduct of what you call due diligence. Due diligence is just the process of, just to break it down, is a process of trying to acquaint yourself with the property that is being bought, just to check whether it is sound. And it can involve issues from conduct of official searches from the Ministry of Lands, just to ensure that the property under purchase does not have anything adversely mentioned against it or registered in the register of titles within the Ministry of Lands. Because an official search will give you information such as who is the registered owner of the property, when was the property registered, are there any charges or court orders or caveats and cautions registered against the property, because you want to address all of this before you get to the level of execution of the sale agreement. All right. Still under due diligence, we are all aware that in the year 2003 or 2004 thereabouts, the then president, former President Mwai Kibaki, commissioned a commission, which commonly referred to as the Ndomo Commission, which was meant to investigate illegally and irregularly acquired property. And that panel, that commission, came up with a report, commonly referred to as the Ndomo Report, that lists property which they thought or suspected were acquired through fraudulent means. And therefore, it is also the duty of the advocate to also take a look at the Ndomo Report, see whether the property you wish to purchase has been adversely mentioned in the report. And if that be the case, then you need to check out whether it's a risk that you would want to take up. Your lawyer will also be looking at the map, the area where the property is located, just to find out first whether the property has been captured in the map and in what context the property is captured. Because as you're aware, this is Kenya, miracles are known to happen. People have bought police stations and churches and all sorts of manner of things. So your lawyer wants to make sure that the property you're buying is genuine, is clean, does not have issues. Sometimes your lawyer will also want to look at privatization documents, because there are instances where property was formerly public land and then converted into private. So in such an instance, your lawyer wants to look at the documents just to ensure that the process was above board. For those of us who follow news, about 2 or 3 months ago, we had a case in Langata, what you call the KMA, the KMA estate, where the government sought to demolish houses of persons that had bought and constructed or bought houses that were already constructed. And the argument from the government was that actually the properties, where the land where the properties were erected forms part of Ngong Forest Reserve. And the argument was no, the minister had degazetted that area. So it is your role as a lawyer to make sure that you look at the privatization documents just to ensure that the property and the privatization process was done above board. It is also the role of your lawyer sometimes with the help of your surveyor, to check out the acreage or the size of the property. Because there are a lot of times where you'll get a copy of title that says the property is 1 acre, but on visitation of the property itself on ground, you realize it is actually less than 1 acre. As they say, kwa ground or katingine, things are different. So you just want to make sure that your surveyor has checked on the property, has taken measurements of all the beacons, and you are assured that as you buy 1 acre, you're actually certain that it is actually 1 acre and not less. And in the event that it emerges it is less, you want to find out, was there a case of encroachment by a neighbor? And was that issue addressed? Or how do you propose to address that issue? And also sometimes if the size of the land emerges to be less, then you'd also want to go back to the seller and try to negotiate on the purchase price. As part of the due diligence, your lawyer will also be looking at the seller himself. You'd also want to do some bit of due diligence on the vendor himself. You want to find out this seller, are they registered Kenyans? And why that is important, it is because now, as you may be aware, there is a prohibition of ownership of freehold property by foreigners or non-Kenyans. So your lawyer wants to find out this property that you want to buy, is it owned by a Kenyan, the event that is freehold? If it is not, then you want to find out how did this foreigner come to own property that is freehold? Because the law as it is, foreigners can only own leasehold property, and the lease itself must be for a term of 99 years or less. So should you get a title where the owner is a non-Kenyan and is freehold, then it's a potential red flag. You want to find out how that came to be. There is also, you may also want to do some bit of background check on the person, or the seller himself or herself, as the case might be, because one of the challenges that we are facing these days as conveyancing lawyers or property law practitioners are cases of impersonation, where people are able to get a copy of the ID of the seller, and then they go to a dark corner somewhere in River Road, and they're able to make an ID similar to that of the seller. The only thing they change is the photo, and then they come and they are posing themselves as the seller. Come and say, my name is James Kamau, I'm the one of this property I'm selling. So as a diligent lawyer, you don't be surprised when you go to his office and the lawyer is asking you to engage the registrar of persons, just to make sure that the information contained in a copy of the ID or that the seller has presented is actually in tandem with the records from the ministry, from the registrar of persons. If it is a company that is selling, because now we have very many land dealing companies, you want to get a copy of the certificate of incorporation, just to ensure that the company is actually in existence and is actually duly registered as required by the law. You may also want to do just a company search to get to know what you call the CR12 commonly. So you want to confirm who are the directors of this company, just to be sure that even as you engage that land selling company, you are dealing with the right directors and the people who actually own the property and not brokers or agents. Now, as part of due diligence, you may also want to do some background check on the lawyers, especially if you're acting for the buyer, you want to do some due diligence on the seller's lawyer. Now, why this is necessary is because first, there is an expressed provision of the law under what you call the Advocates Act, Section 34 of the Advocates Act, Cap 16, says that no unqualified person shall either directly or indirectly take instructions to draw or prepare a document or instrument of conveyancing of any property. In general, that section says that if you're not a qualified lawyer, and I'll discuss shortly what qualified lawyer means, then you cannot draw or you cannot draft conveyancing documents, from sale agreements to transfers to leases that we shall get into details. You cannot draft such. And if you do, then you cannot present it. Should there be a dispute, as a buyer, you cannot present that agreement to court as evidence because it was drafted by an unqualified person. So it is very easy. You just need to go to the LSK website, and in the LSK website, they have what you call the advocate search engine. You just put in the name of the advocate, and you'll be able to get the details of the advocate, from their name to the areas of law they practice, to whether or not they have a license, and also whether they have any pending disciplinary issues. Because as we shall be discussing later, at some point, lawyers also play a very critical role of holding money, holding sale proceeds. So you just want to make sure that the lawyer that you're dealing with and who ultimately might have to hold some money does actually do not have any pending disciplinary issues that you may want to sort out before you engage them further in the transaction. Now, still under pre-contract inquiries, you might realize that after you have done your searches and whatnot, there are certain issues that have come up. You have realized, for example, that the property has a court order registered against it. It might have a caveat or a caution registered against the property. The property might have a bank loan, a charge. So all of these issues, you want to address them before you get into the contract. You want to engage the seller or the seller's lawyer to find out exactly how do you wish to sort this thing out. If there is a caveat or a caution, you want to find out, is there a challenge to your ownership of the property? Is it a court order? You want to find out, okay, how is the court process going on? What is the nature of the dispute? Your lawyer might also want to visit the court and just do a quick perusal of the court file to just be able to acquaint themselves on the issues that have arisen and the challenge on your ownership or the challenge on the property, and also be able to get a rough idea of the direction or the course that the court case is taking. But they can then be able to guide you as to whether they feel it is professionally a good idea to buy the property or not. There are also instances where the property that is being owned is registered in the name of an individual who is holding the property in trust on behalf of others. And in such a case, and this information you'll be able to get once you conduct your due diligence searches and the likes. So you'll have the property registered in the name, for example, of Wilson Mugambi, holding in trust for 2 or 3 people. So in such a case, you want to find out first whether the beneficiaries of this property are aware that the property is being sold. And apart from being aware, you also want them to commit in writing through what you call affidavits of consent to confirm that they are aware that the property is being sold and they have given their blessings to the person who is registered as their trustee to continue and sell the property on their behalf. If the property is registered in the name of a trustee who is holding the property on behalf of a minor, that means persons below the age of 18 who are not allowed to enter into contracts, then you want to find out the position at law is that in such a case, you must get a court order. So the trustee must go to court and demonstrate to the court why it is absolutely important to have the property sold and how exactly they intend to use the proceeds of the sale. And the use, of course, must be to the benefit of the minor who is the beneficiary. So you want to find out before you go to the next level of contract, you want to establish whether there is a court order, whether the trustee went to court and they were able to secure this court order. Still, as part of the pre-contract inquiries, remember all of this time you've not gotten to the level of drafting anything. You are just doing an investigation. You also want to discuss with your client the source of funding. And why this is important, because first there is a sale price or the purchase price, as the case might be. You want to establish from your client where they hope to get this money from. Is it a property that they own and they're trying to sell so that there is money to buy this? And if that be the case, how far along in that process of sale are they? Because that will have an implication on the timelines that you are going to negotiate for them in the agreement for sale. If they are getting a facility from the bank, you want to establish first, before you get to the point of signing a sale agreement, have you gone to the bank with a copy of your bank statements, with a copy of your payslip if you're employed, so that the bank does an interim appraisal on your loan, just to find out exactly how much you qualify for. Because most often than not, we find ourselves in situations where somebody believes that they can qualify for 20 million, for example, from a bank. So they come to us, we prepare a sale agreement, they pay the 10% deposit, which is about 2 million, and they're hoping their bank will finance them the balance of 18. When they present themselves to the bank says, oh, we are sorry, we can only give you 10 million, you only qualify for 10. So you are left in limbo because you have a balance of 8 million, that you need to raise. And that time, don't forget the sale agreement has its own timelines, and there are consequences of breach. So you might end up losing or forfeiting the deposit that you've paid out of sheer lack of engaging your financial early enough. So we always advise our clients, before you get to the level of executing any document, go to your bank, have a sit down with your relationship manager, go to NCBA, talk to Stella or any other relationship manager, share your statements with them before you even get to the level of signing the sale agreement. Have them look at it, have them advise you on exactly how much you qualify for, so that even as you go to the market to look for property, you look for property that fits your budget and you do not end up overshooting. Still under costs, there's also the element of the stamp duty that I think Mr. Gikonyo spoke about, stamp duty and transactional costs, legal fees and registration expenses. It is important that before you even get into the contract, you're able to appreciate that as a buyer, you'll have to finance both the buying price of the property as well as the transactional cost. So it is good that your lawyer at this point, before you get to the contract itself, advises you and gives you a rough estimate of the transactional costs that you are likely to incur, so that you can also prepare yourself sufficiently with those funds. As you are aware, we are also in a very difficult time in our country, where the government is trying to fight day and night with the corruption menace that has been with us since the colonial era. And we now have very strict application of the Anti-Corruption and Economic Crimes Act, what you call ASECA. So do not be surprised when you go to your lawyer's office and your lawyer is asking you difficult questions regarding where you're sourcing your money from. Because as you're aware, we have a very vibrant office of the BPP, Director of Public Prosecution, who will not shy away from issuing arrest warrants even to lawyers if they suspect that lawyers came into contact with money that was acquired through illegal ways that are not easily explainable. So it is prohibited to use the proceeds of crime to acquire property. Therefore, you cannot deploy such monies to buy property. And therefore, your lawyer you might find your lawyer engaging you, especially if you're a cash buyer, wanting to find out where you got your money from and questions along those lines. So that in a nutshell is what will form part of what you call pre-contract inquiry. So by the time you get to this level, the lawyer has a proper appreciation of the nature of contract that he is going to prepare and the nature of transaction that you want to get involved in, and therefore will be feeling sufficiently knowledgeable, and we'll have some level of confidence to get to the next level, which is now preparation of the contract itself. Now, in terms of preparation of the contract itself, there is a provision of the law, it is Section 38 of the Land Act, that provides that all contracts for sale of property must, one, be in writing. They must also, two, be signed by all the parties to the contract, and that, three, the signature of each party is witnessed by a witness who must be physically present when the contract is being signed. Now, it is for obvious reasons that the contract must be in writing. See, we do not want to find ourselves in a situation where people come and say, well, we met in a bar somewhere and when we're having a cold beer, this gentleman agreed to sell land to me, now he's changing terms. We want everything documented so that should you go to court, out of a dispute, it becomes then very easy for the judge to look at the contract and be able to appreciate what the agreement of the parties were, and therefore is able to adjudicate on the matter. Now, it is also important that you also appear physically and not by proxy to sign the documents in the presence of your lawyer. Reason being, you need to appreciate the nature of the contract. You need to appreciate the rights and obligations. Mr. Gitango was talking about this. You need to appreciate what are my obligations, what are my rights, what am I entitled to. If things go south, what is my salvation, what is my fallback position? So it is important that you attend and that you get your lawyer to explain to you exactly what the contract is all about, and that you also sign in their presence. We have cases these days where a lot of Kenyans are now signing contracts, and along the way they decide that, well, I didn't mean to sign it, and they start denying signatures. So as lawyers, we are trying to insist that parties must either attend to our chambers and sign documents in our presence, or in cases where they're not able to do that, then we are happy to go to them and have them sign in our presence. Again, Section 34 that we spoke about of the Advocates Act makes it illegal for non-advocates to prepare sale agreements. They can prepare, but it will not be admissible in court. And therefore, there's no point for you to have an agreement that you cannot rely on should things go south. So just involve your lawyer. I think Mr. Gikonyo insisted on that. It is good, involve your lawyer and try as much as possible to use a lawyer that is independent. So do not fall into this trap that a lot of people fall into, trying to cut costs of sharing a lawyer with your seller. Because a lot of the time when you're buying property, there are conflicting interests. Remember, the seller's interest in the sale of property is only one, that is money. And for you as a buyer, you want to own the property and ensure that after you own it, nobody will come challenging you and you not have any other issues after the sale. So it is important that you engage your own lawyer. And I mean, if you're also investing some 10 million on an apartment somewhere, you see, I think you can afford some 100 or 200,000 to pay a lawyer so that they protect your other 10 million. So it is important that you engage a lawyer and that the lawyer then is able then to protect your interest. Now, the sale agreement itself is then supposed to be prepared by the seller's lawyer or the advocate's lawyer in draft in the first instance. And after they have prepared, then they're supposed to share that with the buyer's lawyer for their approval. This is also provided under what we call the Law Society Conditions of Sale, both the 1989 version and the most recent one of 2015. For obvious reasons, because first, it is the seller that is selling the property, so they are selling based on their terms and conditions. So it is their lawyer that will then know what terms and conditions are we selling this property at. The number two, the lawyer is, the vendor is also the owner of the property. So he's the one who has information regarding the property. He knows the acreage of the property. He knows whether there are any squatters on the property. He knows whether they have leased or subleased the property to anybody, which is all information that is material for you as a buyer. And therefore, all of this information will be contained in the sale agreement, and it is for that reason that we then insist that the agreement in the first instance be drafted by the seller's lawyer. There are instances where parties push that obligation to the buyer, or there could also be instances where the seller himself does not wish to engage an advocate. And in such an instance, it is perfectly in order to have the agreement also prepared by the buyer's lawyer. But ideally, best case scenario would be, let it be generated by the seller's lawyer, because the seller will have more information on the property more than the buyer. Now, what are the contents of this sale agreement? Now, we insist that a sale agreement must be very detailed. It needs to be very detailed, because remember, should a dispute arise, the point of reference will always be the sale agreement. So everything that the parties have agreed must be contained there. If your property, and as Mr. Gikonyo said, somebody promised that I'll put up a swimming pool for you, there will be a gym, there'll be all sorts of niceties. Make sure they're included in the sale agreement. Because should there be a dispute, word of mouth will not hold in court or in arbitration if you decide to go for arbitration. The point of reference will always be sale agreement. So we normally encourage our clients as they visit us to give us as much information as they can regarding the nature of transaction and the nature of engagement they had with the seller. Every tiny details, including things that you might think are not important, we want them to mention to us. In fact, sometimes you'll find lawyers who have questionnaires. So as you attend their offices, they'll have questions that are prepared, that they have already prepared to just try and seek to get information from you regarding the nature of promises and the nature of obligations that the vendor put on himself. So the agreement must contain the entire agreement or arrangement that the parties got involved into. That will include items like movable and immovable items on the property. We've had situations where somebody is interested in buying a property because there is a generator on it, for example. So that is very important, because you want a house where you not have issues of interaction with power. So you are buying a particular house on the condition or on the agreement that this generator is part of the agreement, is part of the deal. And you might be shocked that after the transaction has been completed and you take over possession of the property, then the seller comes and says, well, I'm removing the generator because it was never part of it, because it is a movable property. Remember, real estate, you're talking about movable property, houses, land, and the likes. So if there are any movables like water tanks, pumps, generators and stuff like that, that you feel are very important for you, make sure they are factored in the agreement. And then all the terms and conditions of the sale must be well spelled out. You must explain what are the rights of the buyer, what are the rights of the obligations, the obligations of the seller. Let them be spelled out in a way that is simple and clear. So you must insist on that. Don't go to your lawyer and tell them, no, I'm only buying this property at 1 million. I want like a simple thing of 1 page. No. Let the lawyer put in as much information as possible. Because if the transaction goes out, you realize that such information is very important for you. Then remember, the agreement itself must also contain very clear timelines. It's what we call completion period. And especially in instances where you are buying property off plan. I think Mr. Gikonyo spoke to this. We have instances where a developer is selling property off plan, And the agreement that you have signed into, because it was not detailed, has a clause, for example, that says the completion period or the contract period depends on when the seller completes construction. Now, the moment you put your money there, the seller or the developer might construct that house for the next 10, 20 years. So you need to make sure that the agreement has proper timelines, so that you are saying the contract period is 60 days, is 90 days, is 1 year, is 6 months, in a way that should there be a breach, it is very easy to trace where did the breach happen and who failed in the obligation. In the event that you're also being financed as a buyer, make sure that the agreement itself provides for financing options. I beg your pardon, because there are instances where buyers get into contract without knowing the fact that there are two prices. Well, I'm sure you've seen some property sellers saying, if you're buying property cash, this is the price. If you're buying on mortgage, this is the price. So you might actually get into a contract thinking that you're buying the property at 10 million. And you actually raise midstream that was an offer as a cash offer. And the vendor midstream seeks to adjust to vary the price from 10 million to 15 and says this was a mortgage price. So as you sign the agreement, make sure that that is properly provided, that you are a person that is going to get a facility and that it is very clear. Now, there is also what you call completion documents. And these are the documents that are required for you to effectively transfer the property to yourself as a buyer. They are the documents that confer interest on the property to yourself. And post purchase of the property, they also ensure that you get a quiet and peaceful enjoyment of the property. So some of these documents might involve documents like a transfer, a duly signed transfer. You want to make sure that the seller and the buyer have both signed the transfer. And it is very important to ensure that the seller signs the transfer himself or herself. Try as much as possible to ensure that it is the seller himself or herself. There are instances where the seller or the buyer will have issued a power of attorney to somebody. It is okay, it is allowed under the law, but it is advisable to insist as much as possible to have the vendor himself, even if they have a power of attorney, to sign. Because we have cases where a lot of our fellow countrymen who are out of the country and they have given some of their relatives power of attorney, then they end up misusing those powers of attorney and sell property without involving them. And after that, you have these court cases. You will never enjoy your property. So try and insist as much as possible to have the seller himself execute the agreement, and that they do that in the presence of a lawyer who can then attest to the fact that it is actually true that they came and that this is their signature. Apart from transfers, we have other documents like land rent and rates clearance certificate. You want to make sure that before you buy the property, that the seller has actually paid land rent and rates, and they do not have any obligations in that regard. You want to make sure that the seller also has procured consent to transfer the property. It is a requirement of the law that you get consent to procure to sell the property. Now, this consent will either come from Land Control Board, if the property is a freehold property. A lot of them are out of Nairobi. If the property is a leasehold, then you want to make sure that the Commissioner for Lands has issued consent or is okay with the sale of the property. If it is an apartment or other communally owned property, you want to ensure that the management company in charge of the running of the affairs of that estate has also sanctioned the sale. I think one of the other speakers spoke about the importance of bringing in your spouses on board in the transaction. It is now no longer a favor. It is now a requirement of the law that you must ensure that you seek consent from your spouse. Now, there is what in law we call overriding interest. Overriding interest means there are certain persons that will have interest in your property almost as co-owners, even in instances where they are not registered as co-owners. Now, your spouse is one of them. And it is for that reason that the law then requires that before you sell your property or you charge or you otherwise dispose your property, then your spouse must give consent. And that consent will come in the form of an affidavit under what we call Oaths and Statutory Declarations Act. So your spouse must sign a consent, an affidavit that I'm aware the property is being sold, I have no objection, and know the property forms part of our matrimonial property and I do not have an issue with it. The seller has my blessings or my spouse has my blessings to sell. And this applies both ways, both for men and women. So ladies, you're not to get away with buying property in secret. you must also disclose that to your husbands, and vice versa. In the same vein, we also have certain documents that you might require, not necessarily because they will enable you to transfer the property to your name, but because they'll help you get quiet enjoyment after you bought the property. For instance, if you're buying an apartment that was previously hosting somebody, or somebody was living in it before the acquisition, you want to make sure that those persons have paid electricity and water bills to date, so that you do not buy the property and then tomorrow you have some very men-looking gentlemen from Kenya Power coming to disconnect power in your house, and to make sure you don't inherit a problem. The same vein, if you're also buying a property that is already constructed, like a townhouse, or a block of flats, you want to make sure that the building plans are approved. I think Mr. Mogambi spoke about the building plans. You want to make sure that they're actually approved, so that you do not get into problems with the National Construction Authority post the purchase. Yeah, if it's also a block of flats, for example, even a house that has a tenant, you want to make sure that before the seller completes the transaction, they hand over the rent security deposit that they collected from the tenant when the tenant was getting into the house. Because remember, after you have bought the property, you are now the new owner. So as tenants vacate, they'll be coming to you for a refund of the rent security deposit that they paid. So you need to make sure you either collect that or you knock it off against the buying price, so that you do not get future problems post the purchase. Now, the sale agreement in question, ideally, we also wanted to provide for termination, because and termination and breach and the consequences, because we have provided for rights and obligations of either party. So the agreement then needs to speak to what happens should one party breach. And if, for example, midstream, I feel I do not want to proceed with this transaction, what happens? Because we have cases where somebody is in distress, somebody has brought in a new car from Japan, they need to pay tax, and because they are unable to pay tax, they pretend that they are selling property, but they just want you to pay the 10%. And after you pay the 10%, they clear the vehicle, they change their mind and say, well, I'm no longer selling the property. And then you're left exposed. So you want the agreement to provide what would happen if there's a breach from either party. You also want the contract or the sale agreement to provide for what you call force majeure or acts of God. This COVID pandemic has taught us a lot of things. That sometimes things can happen that make it impossible or very difficult for either party to complete or to discharge the obligations as set out in the sale agreement. You might have lockdowns, you might have restrictions of movement, you might have closure of lands registries and the likes. So you want the agreement to provide for that, and provide for avenues for parties to either renegotiate the terms of the agreement, or rather to give each other time, or to terminate the agreement and be restricted back to the position they were, what we call status quo ante. There's also what you call exchange of completion documents. The end product of the contract negotiation period is swapping of documents, so that the seller will come with what we discussed earlier being completion documents, which are going to exchange with the buyer. And the buyer will come either with a banker's check for the balance of buying price, or an RTGS confirmation showing that you have actually paid the money. Now, when you're being financed by a bank, it is absolutely important that your lawyer issues what you call a professional undertaking, which in essence means is a promise to pay on your behalf. And the effect of that is that will help the seller now submit the documents to you, so that you proceed and transfer the property to your name. Now, lawyers also play a critical role in terms of holding money or sale proceeds on stakeholder basis, because there are instances where the seller does not want to be paid directly. They want the money to be paid to their lawyer, and it is therefore important that the agreement captures that with sufficient details, including the account details, to make sure that there are no grays as you go to transfer the money in the bank. Now, the final thing that lawyers do is what you call registration. That's the final process of the conveyancing process. Registration of documents can be registration of a transfer, where the property that is being sold is a vacant piece of land. It can also be registration of a lease if the property that is being bought is an apartment. Now, something important to mention about leases for apartments and other communally owned property like houses in gated estates is that registration here will be done by the seller's lawyer. Reason being, registration is done against one title called the mother title, where all the properties, the apartments are erected. And because the seller's lawyer cannot give that title to each and every buyer, it then makes sense for them to register all the documents. So you might find yourself when buying an apartment, you're having to pay 3 lawyers, having to pay the seller's lawyer, your own lawyer as a buyer, and then the bank's lawyer. And it is for that purpose that then registration is done by the seller's lawyer. Now, in terms of bank securities, if you're being financed, there are security documents we prepare, like legal charges, debentures, if the borrower is a company, is what you call loan agreements, they are guarantees. Now, all of those documents are registered simultaneously with the transfer. This is just to try and avoid partial registration of a transfer without the charge, because remember, the bank will not pay until both the charge and the transfer have been registered. So those documents will be registered simultaneously, and they'll be registered by the bank's lawyer. Now, finally, as I conclude, I want to mention something about costs, legal fees. You see, a lot of the time when you're buying property, you find yourself with a host of costs that you need to pay. You need to pay your lawyer as a buyer, you need to pay the seller's lawyer. Sometimes if it's an apartment, you have to pay the bank's lawyer. We encourage people to try as much as possible to, especially as a buyer, to engage the bank well in advance and try to engage a lawyer to act for you in your capacity as a buyer, who is also in the approved list of the bank's panel of lawyers. Because this will help you first cut on costs, and then 2, you will formulate a relationship with the bank's lawyer early enough, and it will help you cut costs majorly. So come talk to us, Borero and Ashira, in the panel of the NCBA and a number of other banks. Don't shy away, come talk to us, engage the bank, let them give you a list of the lawyers in your panel, choose the advocates of your liking early enough so that you avoid paying too much cost. I think I'll leave it there for now. Happy to take your questions. Thank you.
Thank you. Thank you very much, Mr. Miruri. Very insightful right over there, briefly outlining the property ownership journey from identification to search, execution of sale agreement, and transfer and charge, and also reminding us of the importance of spousal consent in the current dispensation, and equally the role of an advocate in the property ownership journey. Having understood what it takes to own a property, as enumerated by our speakers for today and our panelists, perhaps Stella, who is our head of property finance at NCBA Bank, you can now lend a perspective around property financing and 2021 outlook. Go for it, Stella.
Right. Thank you very much, Philip, and thank you to the panelists for unpacking this very emotive journey. You find that property ownership or somebody owning a property is very emotive. So one thing that we know very well is that property ownership is a scary journey, especially for first-time home buyers. And many people don't know where to start. And what we are doing at NCBA is to be able to educate our customers out there, and also be able to educate our countrymen to be able to tell them this is all about property ownership. So there's so many fears about falling into prey, about the fake deals in the market, and getting to know, is this property genuine or is it genuine? There's so many developers who have come up and they've conned people. So what we try to do at NCBA is to ensure that we are taking away all these fears from our customers, and we're able to demystify the property ownership journey. Also noting that, like Mwiruri and Sigikonyo has just mentioned about the property ownership journey, you find that sometimes the mortgage journey is not understood very well. So as I said, at NCBA, we try to demystify this, to take away the fears from our customers with our very exciting products. We usually have very exciting products that ensure that we're able to finance our customers to be able to acquire properties. If they want to construct anywhere in Nairobi, anywhere in Kenya, we're able to finance our customers. It could be either within the rural areas or urban areas. And these properties could be either within what you used to call municipalities, or currently what is within the county headquarters. So we're able to finance our customers, and it all depends on their needs, or according to whatever stage they are in life, we're able to take the needs of our customers and be able to finance them. So some of the solutions that we usually have as a bank, we usually have like a property purchase fees. For instance, if you want to buy a property or what you call a home loan, we're able to finance our customers up to 105% financing. And the reason why we have our 105% financing is that we realize that so many people want to own properties, but they don't have the fees. From the research that has been done, and also the research that we have done as an institution, we realize that incidental cost, or what we call closing cost, affects the property purchase or affects the property purchase journey, or it hinders somebody from acquiring a property. So what we've done with our 105 is that our 105% financing product is whereby now we finance our customers either the deposit, the stamp duty, and the legal fees. So we are taking away the burden from the customers so as we can be able to work with them and also actualize their dreams of owning properties. The other product that we have is the plot purchase. You know very well as Kenyans, we like owning properties or what we call plots. And for this particular, we're able to finance Kenyans, or we're able to finance our customers. It could be a plot as either like an eighth, what you call a 40 by 80, or it could be up to 2 acres. We're able to finance this for a maximum period of 5 years. One thing that you notice that our financing is usually up to 25 years, and we're able to walk our customers throughout all these journeys. The other product that we have is construction. As Mugambi mentioned about the construction, about all what it entails construction, we also know very well that many people want to put up their houses according to their taste and preferences. They want to either have a Victorian type of a house, or they either want to have a bungalow or a maisonette, or they either want to have a townhouse. We're able to finance our customers according to their taste and preferences. And for that, we'll be able to work with you. And that's why as a bank, we realize that we need to be able to have our project managers or internal quantity surveyor who is able to work with our customers and even be able to guide our customers as they get into this construction. As the customers give us the bills of quantities, as the customers give us the plans, our quantity surveyor, our project managers are able to review these and be able to tell the customers either are they within their budget, or either maybe they're stretching too much, or either what they need to be able to add. The other product that we have is buy and build, and the buy and build product, it's conjoined by 2 products, that is a plot loan as well as a construction. So we are combining the plot as well as the construction. So as for those guys who want to be able to buy a piece of land and construct simultaneously, we're able to finance our customers. And you note our rates here are very competitive. We're able to finance up to 100% financing, depending on the location where this customer wants to be able to construct. Then the other product that we have is our equity release product. Equity release is whereby now you're creating equity out of your existing property. You could be already an owner of property, and what you want to do is maybe to get into other investments. You want to build another property. We're able to finance you against a property, either you want to an investment, we're able to finance you this. And for that, usually look at the property should not be encumbered. And if somebody, what you mean by encumbrance, and Mr. Modori had mentioned about it, is whereby somebody has the secondary rights to the property. So we're able to check on all that and be able to ensure that we're able to finance you. So then what happens, and I know what has happened in the past is people have this misconception that taking up a mortgage is for a certain group of people. And for that, I want to be able to demystify that. And I say that for you to qualify for a property finance or for a mortgage solution at NCBA, all what that usually look at is your income. You could be either be in employment, you could be earning a salary, you could be getting rental income, you could be in consultancy, you could be in business. We are able to work with you. We're able to advise you that you can be able to qualify for whatever type of property or whatever type of facility that you want to be able to take up. So then in reference to the property, because as I said, we look at 2 things. We look at the income, your income, as well as the property that you as a customer, you are buying. For instance, if you're buying a property, ensure that you get an approval before signing the sale agreement. Mr. Moirori has just taken us through the process of signing a sale agreement. Before you put, before you sign in the fine print, before you sign the sale agreement, ensure that you've engaged the bank and that the bank is comfortable with the security that you are providing to avoid disappointment, whereby you have committed, you've put your deposit, you've paid your deposit either 10%, 20%, and you end up losing it. So ensure you engage the bank before you sign that sale agreement. Looking at our mortgage process, our mortgage process is very simple, and that's why we said we're able to work with our customers through through the journey. We have our dedicated relationship managers who are able to work with our customers and be able to guide the customer at each stage. What do you need to do? So the mortgage journey, it all starts with the discovery stage. It all depends on what stage am I. Mr. Gekonya alluded to various stages that people could be. I could be either maybe I've just finished campus, I've started working, and I can be able to buy a property. So that we can be able to start off with you when you've just left campus or you just started working. You're able to work with you as a customer. This becomes the discovery stage. Then from the discovery stage, you can either, we have two people, either you go to the bank for the bank to be able to advise you on how much you qualify for. Then you go out to the market to look for a property. Or after the discovery stage, you can either go out to look for a property and then come back to the bank and they get the financing. From all these stages, you're able to work with you. And what happens is at NCBA, we have our property center whereby we display our properties from the vetted developers. We ensure that we are giving the right products to our customers. So at our property center, you'll be able to find that whereby we've been able to display some of these properties that we have. And this, as I've mentioned, they're from vetted developers. And we ensure that if, for instance, you are looking for a property, we are able to guide you on where you can be able to get a property. And also we're able to guide on the next frontiers, which is the next frontier that you can be able to invest in. Because currently we
Looks like we've lost Stella. Sincere apologies for that technical glitch, and we'll invite Stella to come back in a few to just finish up the presentation. At this point in time, allow me to introduce Linda Kameme. Linda Kameme is our head of retail banking products. Linda, just say hi to the viewers and just a few remarks as we wait for Stella to rejoin. Welcome, Linda.
Thanks, Philip. Hello and good morning. I hope to our listeners, you are learning quite a bit, and I hope you have a pen and paper and have put in to context a lot of which has been shared. And I hope that we are all gaining momentum, understanding why we need a lawyer, understanding why you need an architect, and why, most importantly, a valuer is important. You do not want to buy a property and you're told that it's in a riparian land, for instance. It was the first time we had that word. So we are truly grateful that we are getting these insights and that we look forward to ensuring that you have the best deal, that you understand why we insist on professionals, whether you will use the bank to finance you or you want to do it alone, then it is key and very important that you actually have this group of panelists in your construction so that you do not suffer any unnecessary damage or suffer any loss for that matter. So we are truly grateful and we ask that you continue getting engaged. Stella will be with us shortly so that we can be able to continue with that. Thanks, Philip.
Thank you very much, Linda, for those few remarks. On to our next segment of this webinar. I'd like to move very quickly to our Q&A session. And I will perhaps invite Stella at some point in time to, before we close off, to perhaps just complete the presentation she had highlighted. I think it's easier for me to start with Mr. Gikonyo. this question goes to Mr. Has the current pandemic affected property prices in any way? We seem to have lost Mr. Gikonyo also. Let me jump into our architect in the room. What are some of the approvals that are required to construct a residential house? Mr. Mugambi?
Thank you, Philip. Well, the key approvals are, of course, the county development approval, depending on the county where you're in, the National Environmental Management Authority approval, that's NEMA, and the National Construction Authority approval, NCA. A few years ago, I think just prior to 2015-16, there were levies to be paid to NEMA and NCA, but those were zero rated in one of the budget readings that were done then. So at the county level, I think the only thing you need to prepare yourself financially, especially for those doing the residential dwellings, is the county development fees. So they normally consolidate the fee to do with the county, the application for the development, site signboard, public health, and also inspection fee. So on average, a residential house, say 300 square meters, the average rate you will pay for approval in Kenya will be around 70, 80,000, depending on the county. Some will be even as low as 50. So, but it's just good to have that in mind when people are preparing to go ahead. There's another approval which I think applies, and it's very important that I mention this. For those who would like to do a borehole, say you're in an area where you do not have county supply of water. So when you're going to do your borehole, it's always good to get the WARMA, or Water Resources Management Authority approval, because you need that approval to actually drill your borehole. And even the people coming in to do the drill of your borehole will definitely need to be facilitated with the requisite documents. And WARMA is a very important, rarely used by single dwelling developers, but it's important for those who decide to actually do their own borehole.
Riding on that question on approval, the relevant approvals, Mr. Mugambi, is it mandatory? Nyakwaronjoro is asking, is it mandatory to have NEMA and NCA approval for residential development below 10 million?
Yes, it is. NEMA, not so much. You find that NEMA is not something that is actually really insisted upon. But for the sake of due diligence, what I've noticed in the last 2 years, it's just good to have NEMA give you the go-ahead. There's normally just a simple go-ahead they give you. You don't need a complete report for impact assessment, but just a go-ahead to say that, yes, you may proceed with your project. They won't really stop you, but the most, out of the two, NCA is very important. You cannot proceed without NCA approval, because NCA approve all projects, from the smallest renovation even costing 1 million to the biggest $1 billion kind of project.
Thank you. And to Mr. Mwiruri John, Donald Andolo would like to know, is it really the role of a lawyer to check the acreage of a property? Isn't that the work of a land surveyor?
Oh, yes, thank you for that question. Yes, what I alluded to was the fact that it is principally the role of a surveyor, but the surveyor will work in tandem with the lawyer. Because should it emerge that after or just before the execution of the agreement, the acreage is different, then it might be actually a case of an error on the title, which will then be upon the lawyer to take to the lands office for preparation of a deed of rectification. And sometimes it is actually an issue of encroachment, which then means the lawyer will have to take it up in court. So the two of them will work together. But in terms of taking of measurements, it is purely the role of a surveyor. Yes.
Okay. Silas Muridi, back to you, John. Silas Muridi would like to know what happens to a leasehold after 99 years, considering 99 years don't stand from the day you buy the land.
All right, thank you. Now, a lot of the leases that we have in the country right now are for 99 years. And what would happen is that there's a process called extension of lease. So the law provides that at least 3 years before the expiry of the term of the lease, then you present an application to government for extension. it is pretty much automatic that the government will give you an extension unless you're in breach of the terms of the lease. So as you buy property, it's good for you to get a copy of the lease itself, because a lot of what you'll get is a certificate of lease. Insist on getting a copy of the head lease, acquaint yourself with the provisions of those leases so that you ensure that there is no breach. Otherwise, just 3 years before the expiry of the lease, apply for an extension. It is a process, of course, that takes time. It takes about 6 months, but you can get approval for extension, but it is rather automatic that you'll get it unless there is a very good reason why the government should deny you that extension.
Okay. To Mr. Gikonyo, welcome back. Mr. Gikonyo, has the current pandemic affected the property prices in any way today?
Yes, it has affected the property. The pandemic has affected the property prices in different ways. In some instances,
We seem to have lost Mr. Gikonyo. Mr. Gikonyo? I think I will shoot this question to Mr. Mugambi as we wait for Mr. Gikonyo to reconnect. Where can one get an occupancy certificate, and what is the importance of this specific document in a purchase transaction?
An occupancy certificate is actually applied on behalf of the client, most of the time by the architect or sometimes by the contractor once a project construction is done, it's completed. And it's applied at the county level, specifically development control offices. So be it Kajiado, Nakuru, Kiambu, whichever county, there's always a development control office whereby you can actually apply for the occupancy certificate. In terms of its relevance, I touched on it. It's very important for you to have this document because it legitimizes that project in terms of completion with regard to the counties. It also says that it guarantees that the project has been completed within the code regulations, that it is ready for occupation. In that, it's actually John can actually touch slightly on it and he can confirm that you shouldn't occupy any structure if you have not been issued with an occupancy certificate. Why? Because if anything happens, say there's some faults and there's some, God forbid, a certain structural failure, then you have no recourse because it needed to have been inspected and given that occupancy certificate as proof that it's ready for occupation. It also helps in terms of transactions. If you want to offload the property or if you want to borrow against it, an occupancy certificate, apart from having a title deed, approved drawings, and also the occupancy certificate, it's just one of those documents you need to have within your file for that property.
Hey, riding on that, Mr. Mugambi, we have a question here from M&M. Once the contractor takes over, what is the role of an architect?
Takes over in terms of beginning construction?
Yes, I want to assume so.
Yes, yes, I just want that clarification. So when the contractor has taken over, the role of the architect is to ensure that the project is actually supervised step by step, and there are inspections done as per certain milestones of the project. So in my case, what I'll normally do, I'll ask for the contractor's work program, which says that he or she will complete the project, say, in 36 weeks. And from there, I'll be able to see that if they're able to complete a certain stage, say, within 3 to 4 weeks, I schedule an inspection and site meeting at that point. And the whole role of the architect, once the contractor has taken over, is to make sure that every stage, and ideally the whole project, is moving, one, according to plan, according to specifications, and definitely according to budget once we bring in all the other consultants. So the architect basically leads the team and ensures that everyone is doing their bit and they're able to be managed from an overall level by we as the lead consultants.
Thank you for that. We have a question here to Mr. John Miruri. A Fantas Mwangi would like to know, can someone claim it?
Sorry, come up again. I didn't get that, Philip.
All right. A Fantas Mwangi would like to know, what are the consequences of leaving a plot unoccupied after purchase? He just wants to know, can someone claim it after purchase if you bought a plot and left it vacant for some time?
All right. Now, in terms of property acquisition, we say that the title is conclusive ownership, is a conclusive evidence of ownership of the property. So the moment the property has been transferred to your name and you have a title or at least if it's an apartment, then nobody will take over that property, nobody will defeat the ownership of that property, whether in your occupation of the property or not. However, there is a risk because if you have property that is unoccupied, then there is a risk of having squatters, take over possession of your property, and conmen as well. So we try to encourage property investors and buyers that the moment you buy a property, if you do not have immediate use of that property, try to fence it off. You can also put up a semi-permanent structure just to show people that the property is actually owned by somebody. Or in the alternative, we also encourage them, if you're buying property, especially in very prime areas, and you do not have immediate use for it, also try to buy through the bank so that you charge it to the bank. Because remember, conmen will of course try to go for property that is very prime. For obvious reasons, it is easier to sell it. And then number two, conmen will also try to avoid dealing with property where there are more than one party. Meaning if you are the registered owner together with the bank is a stakeholder in the property, a conman will not want to fight with the financial mass of the bank. So we encourage people, please try to buy through the bank if you do not have immediate use of the property. We also do have a law called the Limitation of Actions Act in Kenya that then says that if somebody takes over possession of your property uninterrupted for a period of 12 years, then that portion that they occupy becomes theirs through what we call adverse possession. So it is also advisable that much as you're not in active occupation of the property, make sure you make visits on the property just to try and ward off squatters and adverse possessors from taking over possession of property. In terms of ownership, nobody will deny you access to your property, nobody will take away your title by virtue only of the fact that you're not in occupation.
Riding on that, just to build on that question on property ownership, Lucy Segera would like to know, how do I put up properties in my name into the names of my adult children and one that is underage?
All right, for property, let me start with the first question of property, how to transfer property to your children. The process is similar to a normal transfer of property. The only difference is that there will be no exchange of money. So you still have to prepare a document of transfer. It will still have to be registered in the normal process. And unfortunately, you may not get exemption from stamp duty. It is not a clear cut that you're going to get exemption, but sometimes we try and apply to the collector of stamp duty for exemption. It may or may not be granted because that one is subject to the discretion of the collector of stamp duty, but the process is a normal transfer. Now, if your child is below the age of majority, that means below the age of 18, they are considered not to be of contractual capacity. So they cannot sign any documents. Because remember, transfer is a contract between the buyer and the seller, the transferor and the transferee, if I can use a legal jargon. So that property will have to be registered in the name of an adult who will then hold that property in trust for the minor. So the moment the minor clocks the age of majority 18, you either transfer the property back to that minor, or you can continue holding in trust, but you cannot deal with it. The property that belongs to a minor, you cannot deal with it unless you have a court order. So you must go to the court, demonstrate to the court why it is important to charge that property or to sell it, or otherwise deal with it, and the court will either grant or deny consent depending on the prevailing circumstances.
Thank you, Mr. Maluri, for those remarks. Over to you, Mr. Gikonyo. Welcome back, Mr. Gikonyo. Can you hear me?
Thank you very much. I think taking it up from the last question, excuse me from not sharing my video. Obviously, what I was talking about is that that we have seen, and even from a certain number of developers, they have said that they have sold more houses or land during this time of the pandemic. So from the time the pandemic started in about March, April, everyone was cautious and not making a decision on investment in real estate. But you will then find that if you look at people who are selling plots, whether there's Kitengela, places like Ruiru, and areas like that, they have seen an upsurge in sales of properties of vacant land, because people who are living in apartments then have made a decision, look, I had a plot which I had bought a long time, or I had thought of building my house or buying a plot or buying a house instead of an apartment. And they have decided to make that investment decision during this time of the pandemic. So where we are seeing a bit of drop is in areas where you have very crowded blocks of apartments. There is some drop in value or some transactions in places like Kilimani, Lavington, and such areas. But I could say that there's both positive and negative aspects. Another aspect that I would like to then emphasize, obviously, is considering what we've just gone through today, is that the preferences for people is now to see that when they're designing their home, they also need to consider having an home office or a place where you can be able to do your work from home, because this pandemic is going to be here with us for some time. So the working from home is going to be quite normal, and people will have to start getting used to working from home. So you need to be prepared for it. When you're looking at certain locations, you will also then see that you will make a consideration. Do you have stable internet there? Do you have fiber optic? Do you have stable power? Do you have backup power? And these are things that are now going to change. But people now want to live in an area that has more space. There is a growth of people. There are more and more people who have taken to exercising by cycling. So they want to be in a good environment where they can be able to cycle around. So those are the changes that we have seen based on the pandemic. Yeah.
Thank you, Mr. Kikonyo. Welcome back, Stella. And sorry we lost you. I had a question for you. And once you address the question, I'll just invite you to finalize your presentation so that we move on to the next stage of this webinar. So I have a question here from Leonardo DiCapro. He's asking, has NCBA partnered with KMRC for mortgage loan? And are we doing this independently?
Thank you, Philip. And I can be able to confirm, yes, we have partnered with Kenya Mortgage Refinance Company. And one thing that you'll notice that NCBA is a shareholder in Kenya Mortgage Refinance Company. And also, we are very big in affordable housing, which is intertwined with Kenya Mortgage Refinance Company. So once all the systems is live and everything is good to go, we'll be able to notify through the various platforms to our customers on how we can be able to progress on the financing. I can progress to where I had stopped in regards to the mortgage process. And as I had said, the mortgage process is not cumbersome or is not laborious as people tend to think. And all what we do is we usually work with our customers and try to demystify every stage. As the lawyer had already talked about what it entails about the signing of the sale agreement, we are able to work with our customers. So once you get that property, walk into the bank. If you haven't got the property, we have our property center whereby we display quite a number of properties, and you're able to get a property that suits your taste and preferences. It all depends even on your location. We're able to provide all these properties because they are from vetted developers. So then once you get the property, you put in the application, we progress to the approval stage where we approve the facility. And this is approved within 5 days, we're able to issue an offer letter. And once you get the offer letter, it gives you the confidence that you are getting financing from the bank, and you can be able to go ahead ahead and even sign the sale agreement. Remember, the lawyer had also mentioned that we should not be able to sign the sale agreement before we confirm that the property, or before we confirm that we are getting financing. From the offer letter, we progress to the next stage of valuation. We need to be able to value the property. And one thing that you notice that the reason why valuation is very critical is we need to be able to check on the limiting factors on the property. Is the property near a river? Is a property near a riparian land? Or is a property near a river line, or even a flight path? Because those are some of the factors that you need to be able to avoid, or even a road reserve. You need to be able to avoid such factors, because you don't want to buy a house, or even you don't want to construct your property, or even buy a piece of land, and the next day the government is coming to be able to bring down your property. So valuation, or even having a valuer to be able to carry out the valuation, is very critical. And at NCBA, we have a panel of valuers that we work with, and they're able to conduct a proper valuation, and even conduct a search, and even confirm, is this property in the Dongo report that Mr. Mururi had mentioned, talked about. So once we are done with the valuation, which takes approximately 4 days, we progress to the legal process, and the legal process is whereby now we charge the property to the bank, and the charging is the property is transferred to your name, and also held by the bank for a certain period of time. Either it could be 25 years, or depending on the time that you as a customer you prefer. From conveyancing, or from the legal process, we progress once the registration and the charging is over, which takes approximately in between 45 to 60 days, depending on the location of the property, and depending on also other factors that can come with the registration. Then we're able to progress the disbursement, and once we disburse the facility, you become the new owner of the property. This whole process takes approximately 90 days, and as I mentioned, we have our relationship managers who are able to work with our customers at every stage of the property, or even the stage of the mortgage journey. Then the other question maybe you can easily be able to ask is, what are the costs that entail the mortgage process? You know very well that we have professionals that are involved, but one thing that you need to be able to notice that the costs, they range in between 6 to 8%, and these costs include stamp duty, valuation fees, legal fees, and as a customer, I mentioned that you should not be worried about these costs, because we have our 105, and our 105% financing products. What we do is that we're able to finance the deposit, as well as the stamp duty and the legal fees, up to a loan amount of 20 million. Then in all these, we've talked about the property ownership journey. We've talked about what it entails. One thing that you need to be able to know is that what is proper to work with our customers through their home ownership journey. We have dedicated relationship managers.
Sincere apologies once again to our looks like technology is happening on us today. I would like to move to Mr. Gikonyo. There's a question here. Please give a brief on the issue of having solar power requirement for multiple dwelling properties. And in so doing, I would invite you to move your parting shot.
Thank you very much, Philip. As I think we've all had challenges today with power, which then definitely highlights the reason why we need to have an alternative source of power, either through solar power and others. What happened is that a few years ago, there was a statutory requirement that every dwelling house would have to have solar power or solar heating, not solar heating or solar power. But I think that I believe that was temporarily suspended. But when it comes to multi-dwelling, the most challenging thing is how would you able to put those solar panels on the rooftop to be able to supply every house and sometimes that might be enough a challenge having to do that for a multi-dwelling apartments, especially if they are going to be very many, sometimes even as many as 300. As a parting shot, I would like to emphasize that everyone who is going on the home ownership journey, research carefully, consult your professionals, consult the professionals. It's a very it's a major investment in your life, and you don't want to make a mistake. So that is why I would urge everyone that before you make that investment, consult widely, both with your friends, the professionals, with your bank, anyone who is going to be involved in that value chain. It's important so that you don't make a mistake. So that's what I would just say as my parting shot. Thank you very much.
Thank you, Mr. Gikonyo, for joining us today. Wilson Mugambe, please share your parting shot.
Thank you, Philip. I'd like to appreciate NCBA for this opportunity. Before I give my parting shot, I'd like to just add on to what Mr. Gikonyo has mentioned about the solar power, the solar water heating. Initially, it was a regulation from 2012, but it was actually annulled by a parliamentary committee in 2018. So it's no longer a mandatory requirement, because what was there was that people had to have solar water heating specified in their drawings. Otherwise, they were not going to get any county approval. But it was annulled in 2018. So right now, I would only encourage people to actually look at more sustainable development. You've seen the issue we have with electricity. We have solar power, we have solar water heating, rainwater harvesting. Let us look into that. As a parting shot, I would like to say, anyone looking to develop a property, be it a single dwelling or a multiple dwelling, always look for competent professionals. Feel free to consult your networks. The Architectural Association of Kenya is a home of the largest group of building environment professionals who will be more than happy to assist you in your journey. And do not be afraid of any development that you're trying to do. As long as you have the right professionals by your side, I believe you'll be guided accordingly. And definitely consult your lawyers. We always work with our legal colleagues, and it's always important to have them on board in any project that you do. Thank you very much.
Thank you, Mr. Mugambe. Mr. Mururi, your parting shot.
Right. First to thank all of listeners and viewers for busy schedules this morning. These very mysterious creatures. I hope today I have tried to demystify the role of lawyers in the convent transaction, and I'll therefore join the rest of the colleagues in encouraging people to ensure you engage your lawyers, engage your professionals in this journey. There's no point for you to lose money, hard-earned money. You have saved your 10, 20 million, and then you lose all that money because you're trying to cut a corner here. You do not want to pay 100 or 200,000 to a lawyer to assist you in the transaction. That is number one. And number two, and also to discourage people from drafting their own personal sale agreements. Because one of the challenges that we face is that people want to cut costs. They go somewhere seated in a bar having a cold beer, you draft a sale agreement on a piece of paper given by the bar attendant, and then it's such a shallow agreement, and you come to us when things have gone south, and then we are unable to assist you because probably you have a very weak case. So to encourage you, use lawyers and do not fear acquiring property. That is why we are here as professionals to assist you. I know it's a very emotive thing, but we are here to journey with you. So call on us.
Thank you, Mr. Mururi. I would now like to invite Stella to give a parting shot as you summarize your presentation in 2 minutes.
All right, thank you very much, Philip. And what I can be able to tell our customers is that acquiring property is a very emotive product, and talk to us, walk to any NCBA branch, and we'll be able to work with you in the whole property ownership journey. We are there to be able to support you. Our relationship managers, we have vetted the properties, so let's keep the conversation going. Thank you.
Thank you, Stella, for those very, very few and many remarks. At this point in time, ladies and gentlemen, we've come at the tail end of our webinar. I would like to welcome our head of retail banking products, to give us the closing remarks. Go for it, Linda.
So thank you very much, our viewers. Thank you very much, our panelists. To Mr. Gikonyo Gitonga, thank you for gracing and sparing your time this morning to educate us and to be able to set things and help us to clarify on many items that were not clear to us. We thank you very much, our Wakili John Mwirore. We now know better why we need to consult you and not to run away from you, not to think about the cost. Sometimes it's necessarily not as expensive as we think, but it is very valuable to have you and to understand why we need to have a lawyer. We'll be careful not to have those bar conversations or salon conversations where we sign on a piece of paper and throw it somewhere in the dustbin. So thank you very much, and we appreciate you. To our architect, Mr. Wilson Mugambi, thank you very much for being available. Thank you for teaching us new things. Now, at least I think to all our viewers, an architect is a friend. Thank you also for helping us know that there is actually an association for which we can be able to find out or even select, and you can be sure we will be looking out to refer our customers to yourself and to make sure that we are actually aligning with the Architectural Society to make sure that we have all our programs in order. Last but not least, I wish to thank Stella Mutai, who is our head of property finance, for actually taking us through what our properties are like and what we can be able to offer as NCBA Bank. And I can assure you that this is available to all of you and to all of us who are wishing. Do not worry. I have seen some questions on the chat saying, can I afford? Just think about how much do you pay for your rent today? For that equivalent amount, we can actually be able to give you a property, and we shall be playing big on the affordable housing space, and therefore please look out for our offers on that space. To our Group Director, Retail Banking, Mr. Tyrus Muthiga, and our Group Managing Director, Mr. John Gashora, we thank you very much for your support and as continuously being available for our customers to give them this platform. To Philip Omondi, our moderator, we appreciate you and we want to say thank you. At the end of the day, there are very many people who have been working in the hindsight just to be able to bring this webinar to fruition. We want to say thank you very much. We ask that you continue posting your questions, your conversations on our social media platforms so that we can continue to engage and give you all the responses that you may need. We thank you and we honor you for your presence. Thank you very much and have a good day.